as we talk about businesses, we talk about small businesses, we talk about large businesses, we talk about corporate businesses, we talk about non-corporate businesses. Let's consider non-corporate business ownership. Whether they intend to run small farms, large factories, or online e-tailers, all business operations must decide which form of the legal ownership best suits their goals: sole proprietorship, partnership, or corporation. Because this choice affects a host of managerial and financial issues. Few decisions are more critical. Entrepreneurs must consider their own preferences, their immediate and long-range needs, and the advantages or disadvantages of each form. Well, sole proprietorship. The sole proprietorship is owned and usually operated by one person. About 73% of all US businesses are sole proprietorship. However, they account for only about 5% of the total business revenues. Though usually small, they may be large as steel mills or departmental stores. There are advantages of the sole proprietorship and there are disadvantages as well. Let's talk about the advantages first. Well, it provides them the freedom. Freedom may be the most important benefit of the sole proprietorship because they own their business. Sole proprietorship is an answer one does not answer to anyone but themselves. Sole proprietorships are also easy to form. Sometimes we may go into business simply by putting a sign on the door. The simplicity of the legal setup procedures makes this form appealing to self-starters and independent spirits, and it also has low startup costs as well. Another attractive feature is the tax benefit. It is extended to the businesses that are likely to suffer losses in their early stages. Tax laws permit owners to treat sales revenue and operating expenses as part of their personal finances. They can thus cut taxes by deducting business losses from income and income earned from their personal sources other than that of the business. Well, let's talk about the business form, which is proprietorship. Then there is partnership, general partnership, and then there is a corporation. If we talk about the liabilities, the proprietorship, sole proprietorship has personal liability, unlimited liability. But when it comes to partnership, general partnership, it has a liability of a person, which is unlimited in fact. But when we talk about corporations, in that case the liability is capital invested. The amount of capital invested by a person leads into a liability. Let's talk about the continuity of these three forms. Well, sole proprietorship continues and ends with the death or the decision of the owner, and the general partnership ends with the death or decisions of any of the partners. In case of corporation, as stated in the charter, perpetual or for specified period of years, it continues or ends. Let's talk about the management. In case of sole proprietorship, there is personal management unrestricted. In case of general partnership, there is unrestricted dependence on the partners according to the agreement. In case of corporation, there is under control of a board of directors which is selected by the stockholders. And let's talk about the sources of investment. In case of sole proprietorship, the source of investment is personal. In case of general partnership, the source of investment is personal source or the sources of the partner. But in case of corporations, the source of investment is the purchase of stocks, and this is how the business runs. Well, This is in fact one criterion on it.